Well, I think many will be surprised to hear that actually no PMA can rent short-term rentals simply because they cannot get a short-term rental permit in any shape or form. I think in off-plan or any purchase, it's not just the planning of the investment, but it's also the tax planning. We don't want to talk about tax avoidance because we're not in that business, but as a buyer, you need to understand that you're losing, and losing. So a lot of these people want the Bali dream, so they unconsciously, maybe also sometimes consciously, shut down for that risk, and they take it because inside they want to really have that opportunity in property, and they should, but they should really be aware of the risk rather than have a beautiful dream being a nice story and a good start ending up in nightmares pretty quickly.
Hi, welcome back to our channel. My name is Dito. I'm from Accounting and Tax Department of Seven Stones, Indonesia. Today we will covering and discussing and talk about lease tax in Indonesia. Today with me, Mr. Terje, the CEO of Seven Stones Indonesia. So, Bapak, how are you?
I'm good, thank you. Yourself?
Yes, I'm fine. So, as we know, in Bali especially, there are 100, if not 1,000 property that being leased, and surely, in my opinion, it's a good investment. So, before, from your perspective and your experience, before someone, especially a foreigner, want to acquire or want to lease some property in Bali, what they need to consider?
Well, I think there is many things to consider, and I think today we focus on the tax perspective, and I think the awareness of the different tax level on a lease needs to be fully understood, because I think one is the buying and selling of the property. Let's say today you're a buyer and you buy the property, then you may not have too many taxes to worry about because the lease is always loaded towards the seller. But at some stage you might resell your property, so you need to be aware of the possible taxes that can come when you want to exit your investment. And I think another consideration is then the tax level of the operation of the villa and the different levels of how that works, whether it's a daily rental, monthly rental, yearly rental, and so on.
Okay, so what the best approach to acquire a property, actually?
Well, I think it depends a little bit on market area. I think if today you're looking for properties in maybe the hot spots, as we would call it, in Uluwatu, in Canggu, Sese, maybe also Ubud. It's not that easy to find freehold that you can convert into an HDB if you're a foreigner. So I think lease is a good option. And I think today we're not going to talk about the different options of lease. We're going to focus on the lease that today dominates the markets, which in Indonesian law is known as hak sewa. And I guess the benefit for an investor in many ways is the entry ticket, as in terms of money needed for the investment. Lease will be substantially cheaper than freehold. But again, I think people really need to be aware of the tax implications that will come.
As we know, the lease tax in Indonesia is 10%. So from the total of the amount that the deal is. So comparing with another countries in your knowledge, is it cheaper or?
That's actually a good question and something we should look at. I think buying, selling properties in most other countries will have taxes similar to buying and selling property in Indonesia, meaning freehold, buy and sell. Lease is not so common, but I think in most cases it will be considered as part of the portfolio of the owner of the property abroad. So whether that is a private person or a company set up. And I think the same here, that if you're commercializing your property in any shape or form, you must have it in a company. You cannot do business in Indonesia as a foreigner, as a private person.
As we know, there are a few people, especially a foreigner, that acquire a villa under the personal name, and later they use third party to market the property that they lease. Yeah, regarding the safetiness, or yeah.
I guess what you're saying is, if I lease a property from you, and then I can also use you to manage and operate.
Yeah.
And we know that a lease until today isn't compulsory registered with the agrarian office, so it's a notarial deed, sometimes not even that, it'll be a private agreement. But from a tax perspective, I think the tax office would maybe not worry too much about your legal position. I think they would just look at the operational business aspect of the property and tax that in accordance with the different provincial tourist taxes, income taxes, and so on. And when the operator then gives money to the expat, that person, because they're not in an entity, or a minimum they need to have a quitas, may end up with 20%. The other complication that we see a lot with this now is that because Indonesia has tax treaties with a lot of countries, when these expats are not complying, meaning they should have a company and follow the structure of Indonesian law, so they take the money home to the respective country. In many cases, we see that the country of where they receive the money consider that in personal income, and they'll tax it as a full income at the country of origin. So let's say I was a Norwegian, I would comply with the taxes here, pay the 20%, maybe some operational cost, whatever I take home, I might end up with another substantial tax bill because I didn't comply with the tax treaty between Indonesia and Norway.
Okay, so the best approach is, if someone want to lease property in Indonesia, by especially a foreigner, then they should form a company. So yeah, we call it PMA. Yeah. In my experience, if PMA cannot rent their villa or their properties on daily or weekly basis, so we call it short term, and they only can do it for a long-term rental, so monthly or.
Well, I think many will be surprised to hear that actually no PMA can rent short-term rentals simply because they cannot get a short-term rental permit in any shape or form. So that might surprise many, but I think as we do and others, there are other ways of reporting the taxes as. I guess the important aspect is to always be in compliance with the tax that you should pay, and two, you can always choose to work with some kind of local management company or someone that works for you that fronts the permit aspect of the short-term rental. A PMA is only supposed to own the asset. They can buy and sell or own substantial hotel operations.
So let's say a foreigner establish a PMA in Indonesia and they want to acquire property or villa, and let's say it's the price of the property is 1 billion. So how will they calculate the lease tax?
I guess there's two ways of looking at it, or two types of properties, I guess. One is an existing property, and let's say the price is 1 billion, and the tax implication of that is 10%.
Yeah.
It is actually a tax that should be paid, or is a tax to be paid by the seller. But since you're using a badan hukum or a PT-PMA as the vehicle for this, it's compulsory to withhold that tax and make sure it's paid. If not, the tax office can come back and chase you. So I guess what's important when that transaction is happening is to work out how that tax is going to be managed, and that the seller is aware that from that billion we're going to deduct the 10% and pay, or is the taxes in addition to the 1 billion and making it obviously 1.1 billion.
Okay.
And we see a lot of lease agreements and transactions where that just hasn't been discussed, and obviously then becomes a 10% different in the transaction.
Okay, so how about that? I also hear that if the PMA lease only the land, so we call it off plan.
Yeah, I think off plan is happening a lot right now. So people are marketing. They may have secured the land in various forms. Whether it's already paid up lease or a staged lease, they will then try to market the property to potential buyer. And I guess for buyer, the benefit of that is that they may get some discounts. They may have some payment terms over 12 months, 15 months, whatever the development time of the property is. I think obviously it's important to see who the developer is, that it's a capable and well-established company that knows what they're doing and most probably will deliver. But in that case, the PMA can help reduce their own taxes or help reduce the seller taxes, so that the price may be easier to agree about, and you can find a fair middle ground. And with that, I mean, you can divide it up in a few different contracts, because the property obviously doesn't exist yet, but the PMA coming in, they acquire the land, and obviously on the land it is 10% taxes deductible. During the construction, we can do what we call a construction agreement, which will depend a little bit on who the developer is. So we call it self-built in Indonesia. The PMA is actually executing the build themselves, technically. And the taxes of that will be between 2 and 6%, depending on the developers. So it's important to have that conversation with whoever you appoint to do the build for you. In addition to maybe have some sense of profits, you can have what we would call a construction management agreement, which also could be 10, 15, 20% of the overall purchase price, and that would be, I guess, a 2% withhold taxes from the PMA paying it to the developer. So that way you get an average tax savings of maybe 5%, and that is fully legal. I think many try to do other ways of saving, which this can be used on both an off-plan and a existing property, but we see a lot of properties where they'll do 60-40, 70-30 on a certain percentage towards the building, and then they'll have a percentage that will be furniture or something like that. That to me, long-term for the buyer, is probably not a good solution, because when you buy, let's say we use a figure of 5 billion, so I buy a villa and just use 10 years as an example. If I pay and comply with the taxes on that, or the taxes of the seller, that 5 billion I can depreciate in my books year to year and reduce my profit tax. Obviously for the first 3 years, people tend to use the minimum taxes of 0.5%, but beyond that you have 11%. And the problem with that is that what I see then, the furniture portion maybe becomes too high, and you can't write that off in the same way and depreciate that in the same way. One, the depreciation time of furniture is quite short, only 8 years. But the tax office will also have a maximum of what they allow. So 2-bedroom, 3-bedroom, 4-bedroom villa, they'll have a cap, I guess, on how much they allow. And you would think at some stage that tax office will put 2 and 2 together and see, oh, there was a 5 billion transaction. Let's say 2.5 for the building, 2.5 for furnitures, but they can only depreciate 500. The other 2 billion sort of falls in between, and obviously raises red flags.
One should be careful also if doing the off-plan.
Yeah, I think in off-plan or any purchase, it's not just the planning of the investment, but it's also the tax planning. We don't want to talk about tax avoidance because we're not in that business, but tax planning. And I think many people are not aware of the impacts, and they think that whatever they report, the Indonesian tax authority takes that and move on. But we see over the last, I guess, year that they are much more diligent. They have some cases access to people's bank account. They cross-check in between different entities and persons, and 2 to 3 years into the future, they show up with questions and possible investigations to figure out what really went on. So I think people need to be careful with that.
Yeah, because in my experience, if there's an investigation from the tax authority, then it can cost you more than the amount, the tax that you should pay if not doing them.
Yeah, I think at that stage you're open to the penalties that obviously the tax office can put on you if they find that you've done something not deliberate, unpaid taxes. They can penalize you with, I think, up to 200%. You know better. If it's been done deliberate, they can penalize you with up to 600%. So it's substantial risk in additional tax costs. I see in some cases that the tax office may or may not exercise that, but what for sure happens if you have deliberately attempted to do tax avoidance, they'll look into everything, and you'll spend a lot of time dealing with the tax office that you could deal doing your business and sell more villas or whatever it is that you're doing. So I think it's not worth it, considering also that the overall taxation level in Indonesia still is quite low. Yeah.
We call it today as tax management, not tax planning anymore, because tax, if we say tax planning, then it tend to be in the gray area. But we
No, I agree with you, and I think that in where I'm from, Norway, you can't even do tax planning. If you say tax planning or they find out that you've done tax planning, they'll come after it. It's not allowed. So tax management, I guess, is the right word to use.
Yeah, and will the government take a look on it or take it more seriously, or they will check?
Well, I think absolutely they will. I think one is the sort of general tax income loss. No country likes that, and we need to make sure we pay taxes, so that contribution into, for instance, infrastructure. Everyone complains about that, but they don't want to contribute to the taxes. So it's like a bit of a silly conversation to have. But what I see clearly, there's two reasons for why this will be a lot tighter forward. One is because the sort of rumors around the moratorium, which I've said the whole time I don't think will happen, but I think we'll see a much tighter, regulations will be enforced in a different way, including taxes. Two, I think that will be used as a tool to slow down, and people will consider a bit more carefully on their developments. And I think three, when we look at the new president and his recent statements and visits to Bali and so on, he's very determined on tax collection in any shape or form. He's talking about obviously the big tycoons and everyone that hasn't paid taxes, but also by several occasions has mentioned the property developments and what goes on in Bali, that they want to make sure that the relevant lawfully set taxes for the government must be complied with.
There are two dates actually. The one that to report the tax, that's common practice, but I can say it's wrong, and you cannot do that actually, because we cannot book it as the legal deeds. So if it's under table, we cannot do that.
Yeah. Well, I guess that sort of habit of underreporting is something that obviously goes on and happens on a daily basis. And the weird thing or the strange thing is that people think it's okay, and that's the way things are done in Bali. I don't think it's okay, and I certainly don't think the government thinks it's okay. Yeah. By law, it's clearly a tax fraud, not tax avoidance, not tax planning, it's tax fraud. And I think, like you say, it's difficult to find bookkeeping for that, and it can get you in trouble not just with the tax office, but also like PPATK, suspected money laundering and so on. So it's not a advised way to go. And the simple thing for me, and the best way of trying to come to terms with this, is that as a buyer, you need to understand that you're losing. So you're, again, back to the example of maybe 5 billion villa purchase and you report 2.5, you're helping the seller to save half of their taxes, but you are the one that will carry on the risk into the future of that tax avoidance and tax fraud. You are the one who will not be able to depreciate that in your books, so you may end up with a much higher profit tax and therefore lose again. And the last with that is, once you have an exit on this too, and why we argue in other parts and other podcasts that we do that you should consider different lease structures like HGB on top of freehold and so on, is because when you sell a villa out of a PMA, say 3 years later, 4 years later, you're beyond the 4.8 billion and the 3 years limit, then you get taxed, obviously, VAT, and you can load that, I guess, to the buyer if they're willing to pay that. Then you have the 10% final income tax, but it's not final. The money then comes into the profit and loss statement of the PT, where you cannot depreciate anything. You get taxed 11% from profits, so either you reinvest or you then take out as dividend, and you get taxed 10% if you're a tax subject here, but if you're abroad, 15%. So the tax level can get substantially high, and I think a lot of people forget about that. So the buyer, again, need to be aware of that to calculate their overall investment.
Our potential client and some of our client. So we want to comply, correct that, but what we want is the best for them and the safest way to do the business in Bali. But the thing is, if it's not fit to them, then
I think what you're touching on is, and we discussed in another session earlier today on a group of us coming together. I think the weird thing that I see, and I've tried to figure out, sometimes in Bali people do things that they wouldn't do in their home country, so they're taking more risks in another country than they would do home, where obviously the risk is substantially higher because you're in a foreign legal authority and you're willing to take more risks here. I was trying to think why that happens, and I think there's two reasons. One is that, like you say, we sometimes lose clients telling the truth. They go to others who have I wouldn't say lying, but a modified truth, and they want to listen to them. And to me, I sort of question mark why that happens, but someone who understands psychology and mindset says that intrinsically, a lot of these people want the Bali dream, so they unconsciously, maybe also sometimes consciously, shut down for that risk, and they take it because inside they want to really have that opportunity in property, and they should, but they should really, really be aware of the risk rather than have a beautiful dream being a nice story and a good start ending up in nightmares pretty quickly.
Someone comply with the regulation and everything, this should be okay actually. But
I think the what I see with this is that Indonesia is only going to go one way when it comes in terms of regulation enforcement. It'll be tighter and tighter and stronger, like any country normalizing. Korea, Japan, whoever was gone through the exercise over the last few decades. And I also think that the new government, I get this question a lot: is there going to be any changes? I don't think there will be any sort of detrimental or different extreme changes to policies or anything like that. I just think that they are going to drive compliance, and that is going to shatter some of the dreams that a lot of these developers and investors has. So it's better to come in line before that happen rather than having the issue when it's too late and the penalties and fines are substantially higher.
There are many types of tax in Indonesia, and there are many regulations regarding tax in Indonesia. List tax is one of them. So the rate, like you said, it's it's quite low, comparing with other countries in Indonesia, and with the right management structure, then we can, even though PM8 cannot get the short-term rental permit, we can the structure that allow them to also doing the short-term rental for their property. So
no, I think we're not trying to prevent people or telling people not to invest in Bali, rather the opposite. I have for, I think, more than 20 years spoken about Indonesia as a, massively potential for investment, and it's coming more and more. Bali in specific, maybe within hospitality and tourism. But I guess that saying of if it's too good to be true, it normally is. So these delusional ROIs of 40%, 30%, 25%, up to 23%, I think is not realistic. But with a good business structure, a good managed property, good location, good company that drives it, much better ROIs can be obtained than compared to maybe other markets like Australia or parts of Europe, which will maybe have a 2 to 3 to 4%. And here you can, without stretching it too far, probably up to maybe 8, 10, 12, sometimes 15%. But I think beyond that, it's difficult without not being in compliance.
That's all for today. Thank you, Bapak, for joining us in this channel and conversation. We can provide you the more details of information regarding the tax and property, and also from the legal aspect. So thank you, and see you in the next episode.